In the FX quadrant, the March Canadian dollar goes back to back and rallies for the second consecutive session, but the move itself just wasn't that substantial. Since the low close on March 10th, the Canadian dollar has only rallied 0.53%, and both sessions started with moves lower before they rallied up to turn positive on the day. The low today was 69.06, which was down 0.58%, but the high today was 69.64.5, which was only up 0.27%, and as of the cash close, the Canadian dollar is still up 0.15%. As we reach the midpoint of the trading week, the Canadian dollar is down 0.14% for the week. The Bank of Canada cut rates by 25 basis points this morning, bringing its policy interest rate down to 2.75%. This marks the 7th consecutive rate cut since June of 2024. The Bank of Canada highlighted that inflation is near its 2% target and noted that the lower rates are starting to boost household spending, but they expressed caution about the risks to Canada's economy due to the trade tensions with the United States. Speaking of trade tensions, Canada's Energy Minister, Jonathan Wilkinson, spoke today about Canada's options in response to recent U.S. tariffs. He said Canada has options for non-tariff retaliation, including restricting the supply of crude oil exported to the U.S., as well as the potential to tariff or restrict imports of ethanol to put pressure on U.S. farmers. According to Wilkinson, officials have identified an initial tranche of $30 billion of U.S. goods that will likely face tariffs, with a larger list under consideration. This type of talk injects uncertainty in the Canadian dollar, which is likely part of the reason today's rally could not take hold.